With Tesla stock going up 100% over the past few months, the Tesla short sellers are getting absolutely hammered. In this video, we're going to take a look at all the Tesla short sellers, where they are right now, and although we're still going to cover the famous Tesla short sellers like Gordon Johnson, we're going to take a look at some lesser known Tesla short sellers that have equally as much money as the most famous Tesla short sellers. And with that being said, let's get right into it. The Tesla short sellers are covering their shares as Tesla stock goes up, and as a result, they're being forced to cover their position and buying back their Tesla stock, causing the stock price to increase more and more. But as these Tesla short sellers continue to cover their position, they're making the stock price go up, causing even more Tesla short sellers to have to cover their position. And this is a cycle we're seeing over and over again, and Tesla stock just keeps going up because of this. As a result, there's just so many Tesla short sellers that are getting hammered. So let's go ahead and cover who these Tesla short sellers are and what they're doing right now. The first short seller on this list is Jeff Osborne. This is a Wall Street analyst that has been saying short Tesla so many times, constantly reiterating this sell rating on Tesla stock. Since August 2018, he's actually reiterated his sell rating 31 times. And most recently, he actually stopped repeating that sell rating, and strangely enough, he's sticking to his sell rating and he's actually still holding on to his Tesla short right now. Let's take a look at some of the ridiculous things he's said in the past. In this following clip, he talks about competition, something we've always heard over and over again. And strangely enough, he's actually talking about a demand cliff, how Tesla's demand will diminish over time.
But Jeffrey, it seems like Tesla still doesn't have a brand rival in electric vehicles. I mean, I know other people make them, but it's like individual little vehicles. If you think about high quality or at least high visibility electric vehicles, it's just Tesla. So how much of this $200 price target that you have on the stock assumes that that's still going to be the case in 2 years, or that it's not going to be the case, that they really will have a brand rival?
Yeah, no, exactly. So we valued off of 2020 earnings power, and certainly the lower demand that we've seen in the first 2 months of the year, begs the question as to what the sustainable rate of demand for Tesla is going forward. Now that the deposit base has been depleted, I think that's sort of the million-dollar question: is what is the natural run rate of demand globally? Certainly, things have decelerated quite dramatically here in the U.S., but you've got Europe and China.
These are horrible arguments, but what Jeff Osborne is most famous for is having the lowest price target on Tesla stock. This took place at around July 2019, and let's just see what he has to say about this price target.
I want to bring in Cowen Managing Director and Senior Analyst Jeff Osborne. He's actually got the lowest price target on the street for Tesla at this very moment. What is it?
Yeah, we're at 140, Andrew, so 100, based off of a multiple on 2021 earnings power.
And what do you think is going to have to happen between now and then for that number to be realized?
In terms of the price target, I think it's the profitless prosperity of the cars. Phil touched on it in his hit there. But right now they're essentially wrapping dollar bills on every car that they're sending out and not investing in the brand. So there's a whole host of problems. I don't dispute that the quarter will be pretty solid in terms of the delivery estimates. There's been a lot of leaks during the quarter, and so estimates have been raising throughout the quarter, which is nice to see, but it's certainly a mad scramble here at the end of the quarter to hit the estimates.
So these two clips are actually within a 1 month span period. In the previous clip, he talked about how Tesla had a demand problem where they peaked out in Q1 and Q2, but in this video he openly admits that Q3 Tesla demand was solid.
I don't dispute that the quarter will be pretty solid in terms of the delivery estimates.
And we're constantly seeing this happen to all these short sellers. They're changing their thesis on Tesla stock all the time. First, it's Tesla has no demand, Tesla cannot make profits, and now that Tesla has made profits, a lot of Tesla short sellers have scrambled away from the media, but a few of these short sellers are actually still here with us today on the media, and they've made a total fool of themselves. And one of these Tesla short sellers that are still here with us today is Craig Irwin. Now, Craig was actually bullish on Tesla at one point. He was constantly reiterating his hold rating and at one point actually a buy rating, but recently he's actually turned into a sell rating, and ever since then Tesla stock has been going up over and over again. After appearing on CNBC 4 days ago, Craig Irwin has made horrible arguments, and one of these was about Tesla recently raising $2 billion in capital by offering shares to investors. This is something praised by many Tesla bulls, but apparently Craig sees it as a bad thing.
Let me make an argument to you.
Yep.
On behalf of Gene. They raised the money.
Yep.
It puts them in an even better position than they were a day earlier.
Yep.
If this whole story is about are they going to have a cash crunch, they just help themselves immeasurably.
So they had 6.7 billion in cash at the end of the quarter. Why do they need another 223, right? The only reason they need another 223 is if they're going to reverse what's benefited them to the tune of 400 million over the last 2 quarters, the lean out of the channel, and then we're going to see increased R&D and SG&A this year instead of R&D down like it was last year.
What happens if I told you that they were going to build another factory in China?
They got to have the demand for that. They got to actually sell the vehicles before they can do that. And the factory in China, they've been telling everyone, has capacity for 150,000 cars. I mean, today, the run rate that they theoretically can produce at is 1,000 cars a week, 50,000 cars. They don't need cash for that. Okay. I think this is just them doing.
What do you think the stock's worth?
I think it's worth about 350.
You're still at 350. You don't think this advanced your calls at all?
No. I mean, I still think.
Do you think it was smart for them to do this?
Absolutely. It was the right move for the CFO. He made a good decision. There's an old axiom, right? You raise money when you can, not when you have to. Last year, they were backed into a corner a little bit. That's why everybody was negative.
Is it just me, or does Craig seem overly fearful of what he's saying? His voice is shaking up and down, and he doesn't seem like he's confident about what he is stating. Another Tesla short seller that has recently been on the media is David Whiston. Now, for one thing, I can't really tell, is this guy really a bear on Tesla? Because he went on CNBC and he was talking about how his price target is $326, and this occurred on January 30th, 2020. But as you can see in the following clip, he really just backs up the bull case, even though he's supposed to be the bear.
Well, there's smart people everywhere. I mean, some retail investors are very astute, and some are just following a trend. It really just depends how much work you want to do and how much interest you have. I would caution, though, there's a difference between, I think right now a lot of people feel very, very, very smart that they invested, say under $200 a share and whatnot. And that's great that they've made a lot of money, but being an analyst means you're not in love with the company, in love with the CEO too. And there's a big cult-like following around Tesla and around Elon.
Yeah, so to that point, your fair value on Tesla is $326. Obviously, it's trading at $644, $645 a share right now. How do you get to that number, and why do you see such big risks to the price right now?
Well, I wouldn't say there's. I don't want to get too negative here, because I did say in my note last night that this is the most optimistic I've felt about the company in my over 5 years of coverage. It's just that in terms of vehicle volumes, I've already been pretty generous with them. To get to my 326 number, for example, I'm at about 566,000 deliveries in 2020, and I have been for a while. It's certainly possible that number could go up a bit because they've got some more capacity coming online. I just think you've got to think about the whole picture here. You've got to think about key man risk. You've got to think about balance sheet risk, although they do have a lot of convertible debt that they could possibly just pay off without issuing cash. But I've just never seen anything like this, and they're still a very small company, yet they're the second largest market cap in the world. They're small in terms of volume, I mean. So, yes, it's a very exciting story, but stocks don't go up forever either, especially for little reason.
Throughout this whole interview, David Whiston basically defies himself. He's stating all these bullish arguments. In fact, this is the most optimistic he's been about Tesla, yet for some reason, he still has a $326 price target. So tell me, David, why aren't you moving that price target if you're aiming for 566,000 vehicles plus for 2020? This is massive growth for Tesla, and in fact, this is actually quite a bullish vehicle estimate. And he actually talks about how the estimate is lower than he thinks it is. And this next Tesla bear, we're not really sure if he's a short seller, although it's pretty likely, really isn't too surprising, but at the same time, it's also corrupt. This just totally exposes Business Insider, a media source that just constantly talks negative about Tesla. The CEO of this company, Henry Blodgett, is actually a Tesla bear. This isn't really too surprising, as the whole Business Insider is bearish against Tesla. We see this occurring over and over again, and it's not a surprise that the CEO of the company is a short seller of Tesla. And the following clip is funny because Henry Blodgett talks about how Tesla stock was basically flat over the past 5 years at the time he was speaking, but he made this statement right before Tesla went to the moon and is now at $850 a share at the time that I'm recording this video.
Stock's down more than 30% over the past year.
And flat for 5 years.
Yep.
This is no longer this big growth story that everybody's got to jump on. It's the future. It is a company that needs to work from. You go back to Apple, Steve Jobs had Tim Cook even before Steve Jobs left. Tim Cook was a master at producing devices. Everybody knew who he was. Everybody knew who the rest of the management team was. At Tesla, it's still just Elon. And this is a huge company. So even if he stays CEO, and he can do whatever he wants, doesn't actually have to do anything, you need to build up more folks on the management team who investors know and trust and who are consistent and who deliver on what they say they're going to deliver. Part of it is that the story keeps changing all the time. And I think that it's a red flag not to have some just seriously experienced people who can come in and talk to their prior car making experience and the financial experience that goes into that and just say, look, we're going to build the controls into place and the consistency that you deserve being a shareholder of a company of this size and scale, and it wants to be a car company for the next 100 years.
It's pretty clear that no one should trust Business Insider, with the CEO openly stating that he's bearish on Tesla. Given the fact that the CEO of Business Insider is bearish against Tesla, and that Business Insider makes Tesla articles, it would not be a surprise if the Business Insider articles were negative on Tesla. And that's just the sad truth of the media. And now let's move on to the most infamous Tesla short seller, Gordon Johnson. And this time let's actually take a look at what his argument is on Tesla now. At this point, if you're Gordon Johnson, you're just mentally insane if you cannot change your mind and admit that you're wrong.
Tesla, over the past 10 years, every single year, they've lost money on the net income line. Over those 10 years, they have a cumulative loss of over $6 billion, despite billions of dollars in taxpayer incentives. And it's just factually incorrect. They haven't generated free cash flow over the past 5 quarters. I don't know how you're defining that, but when looking at operating cash flow less CapEx, that's just factually incorrect. We'll see what happens this year. But when looking at the facts and not looking at an aspirational story, demand for their cars is collapsing in Europe, the USA, and China, as well as, pretty much every other locale. And you're going to see that in 1Q. 4Q, they did about 111,000 in deliveries. I think that number could be as low as 80,000 in 1Q. They're selling 367,000 cars a year. VW is doing millions of cars per year.
After spewing out all these lies, there's no media source that would ever invite Gordon over unless it's just for the views. If you enjoyed this video, please hit that like button and subscribe, and I hope to see you in another video.